It's Monday, October 21st, and we have Gary Wagner next. Gary, thanks again for being with us.
My pleasure as always.
Gary, the U.S. now has a 3-month extension on the debt crisis. We saw gold spike over $1,300 last week. How do you think it will react from now until then?
Well, you know, it's hard to say, but there's a couple of facts that are absolutely apparent. First of all, we really didn't solve the two issues we had, which is the debt ceiling and the budget deficit. Really what we did is we kicked the can down the road again, except that this time we did it without any teeth at the end. And what I mean by that is when we had these issues back in 2011, what we said is that if they couldn't come up with a solution, there would be sequestering or automatic cuts. In this case, all we've done is said, okay, we will extend this till January 15th. So that's the first thing. They haven't solved anything, and that means there's uncertainty, and uncertainty, of course, is a bullish factor for gold. The second thing is tapering. We really can't perceive a scenario in which the Fed begins to taper this year, let alone the beginning of next year. And so those two factors could very well be supportive of gold.
So, Gary, is it the debt crisis that will be helping gold, or is it the loss of confidence in the U.S.?
Yes. What I think really is the fact that the free world itself is perplexed at why we can't resolve these issues and solve these issues. So, for example, China actually downgraded the United States credit rating last week from an A to an A- because of the fact that all we did was kick the can. That's what they cited, was the fact that we weren't really able to do anything or resolve any of the issues. So our credit was actually downgraded by the Chinese last week.
Gary, let's look at gold this week. What can we expect? We have jobs numbers out tomorrow.
The interesting thing is when we had the partial government shutdown, of course, these reports stopped. So we really haven't had any of our economic reports, except for I think the Beige Book just came out. But other than that, we really haven't had anything. So we're going to really be playing catch up, and I wouldn't even fathom to guess what the outcome might be from that. My perception is that we'll see that jobs in terms of the unemployment went up or the employment went down. I think that that's what we'll see. But it's going to be an interesting week to say the least.
Gary, before we get to your insert now, what key levels are you looking at for gold?
Well, first of all, 1,300. When the market came down the other week and touched at about the 1275, 1280 area, it really bounced off there. So there's really good support there. Of course, when it popped up $40 last week, that really pushed it well over 1,300. So in terms of resistance, and this is the big number, is 1,330. Because from 1,330 to about 1,360 is really a band of resistance that until we can break above that area, I really can't on a technical basis say that the market has moved back into a bull or rally mode. It's still under pressure. And as long as it stays above, say, 1275, I really can't say that it's extremely bearish. So it's really caught in the middle, in between a major support and a major resistance level, which tells me you could actually see a little sideways action.
So basically in no man's land. Gary, on that note, what have you brought for us today?
Well, keeping in line with the topic that we've been discussing, are those support and resistance levels, and what I hope to share with our viewers today is technically how we actually derive support and resistance levels, and kind of go into a little bit of an explanation for the different techniques that we use for support and resistance, and how they have panned out historically. In other words, have they given us valid information in the past?
All right, on that note, let's get to it.
You got it. You know, on last week's show, we talked about the fact that although technical indicators were pointing towards lower pricing in the market, we had a wild card. And that wild card, of course, was the fact that we were at the tail end of our budget and debt ceiling crisis here in the United States, and whether or not the 17th of October, that deadline would come and go and they'd be able to resolve it. My sense was that there would be some sort of an 11th hour decision. That's pretty much what we got. We got an 11th hour decision, but the decision was simply to kick the can till January 15th. That being said, the market reacted the following day by really bringing the price of gold up substantially, and we saw gold move up roughly $40. We're looking at a daily chart, and within that daily chart you can see this is the reaction following the decision by the United States government to raise the debt ceiling, one, and two, to postpone things really up until the 15th of January. And that, of course, led many to believe that they're really not going to begin, when I say they, the Fed is really not going to begin tapering in any way soon. Probably not going to be this year, and it might be the second quarter of next year when we start. And we had this tremendous rise in the marketplace. And this, of course, was on Thursday of last week. Friday, a small down day. This is that red candle here. And what we're looking at is the current market as it trades Sunday here in Hawaii. Of course, Sunday here in Hawaii is Monday in Australia, as it goes Australia, Hong Kong, and then rotates around the world. Right now, what are we looking at for this week? Well, first of all, we can see where these series of tops have created some sort of resistance. And really, to plot the different levels of resistance, what I typically do is look at one, Fibonacci retracements, and two, basic trend analysis. And when we look at basic trend analysis, what we'll find is that we had a true and utter breakout in the marketplace. We're looking at a half a day chart, 720 minutes, 1440 to the day. And all I've done is drawn in a simple trend line. This trend line is being fixed from these tops here, and then we simply extend them. And there's no doubt we had this clear and defined breakout above this particular resistance point. Market's currently trading around 1317. You can see that these recent lows take us to about 12, just above 1250, and we absolutely had a breakout above this resistance line. However, there's a much larger resistance line and that we haven't overcome, so we're kind of in the middle of that, and let me show you what I mean. To do that, we're going to pull up this basic daily chart right in here, and when we do that, we get some really solid information. Now, first of all, this is the major resistance line that we have been seeing in gold, and again, it's from the series of tops, and then we simply carry it forward. If you recall from last month, we talked about the fact that when we had this tremendous rally, and the rally that I'm speaking about is a rally from 1181 up to 1435, it was the fact that we had this failure to actually take this out that led me to believe that this last rally, although absolutely different than rallies that had been found before that, not only in terms of size and price move, we had a real difference. The fact that it was unable to breach this resistance line really told us that we were still within a bear market. And unless we could see it move really through there, we're probably looking at lower pricing. We in fact got that. But as the market came down, we had a very, very logical support level that it landed on, which is 1250. And let's explore where that comes from. Really, all we have done is created a long Fibonacci retracement. And that Fib retracement that we're looking at begins at about just over $1,000, 1040. It's right after the market hit these highs at about 1250, came back down, and this is that big rally right in here when we simply fix from the bottom 1040 up to the top, which is above 1900, and then plot our various Fibonacci retracement levels. The 76% retracement level of that move is 1250. We can also see that we have had this market fall to that point and then begin to move up. So we had a logical place for support to fall into the market, but we also had a logical place for resistance to come in after the market moved up. If we take a look at this lower support level, and let's go ahead and blow that up so you can get a better idea. And this support trend line itself was drawn by fixing our two lows. This low here, market comes up, comes back down. So this was our secondary fix point. When we looked at that, what I was looking for was some sort of a compression triangle or breakout. And in fact, as this market came down, it did break below this compression triangle, found support at 1250, and is now moving up. But quite obviously and quite easily, we can see that once it hit the upper level of this former support line, this now has become resistance. So what am I thinking we will see in this week's trading? Well, first of all, let's look at our absolute support. I think that right now 1300 to 1306, that's going to be a critical kind of line in the sand as long as it remains above that particular price point, the next real resistance level that gold should encounter if it continues in its upward path is going to be between 1330 and 1336. That is really the beginning of this resistance band. The band above that would be around 1370 in terms of absolute support, 1300, 1276, and then of course 1250, and we just talked about where the 1250 came from. Because the market changes so quickly, I will have, as I always do, bonus content available for Chartist viewers that are looking to dive deeper into this topic. And for those of you that do want additional information on this topic, simply go to our website, thegoldforecast.com. On the landing page itself, if you scroll to the bottom of the screen, you will see this copyright. If you go ahead and click that, it will take you to the sign-up form that will take you to Chart This After the Show, and that's where we keep our additional Kitco bonus content. Again, retracement levels and using trend analysis and Fibonacci retracement to determine support and resistance.
And Gary, thank you so much for that.
It's always my pleasure to share what I know with the viewers over at Kitco. Have a great week.
And thanks for watching this edition of Chart This. You can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Cambone. Thanks for watching.